Hello everyone and welcome back to my channel Things CSEC. Today we'll be doing the CSEC Principles of Accounts May-June 2020 Paper 1. But if you're visiting the channel for the first time, hit that subscribe button and turn on your notification bell so that you know when new videos are being uploaded. And hit that like button as well. So this video is going to be in a two-part in covering this paper. So part one, we're going to be looking at questions 1 through to 30, and then in part two, we'll be covering the rest of the paper. So make sure that you subscribe so that you know when part 2 is out. So let us get right into this paper. The first question says, a non-trading organization is mainly concerned with. We know a non-trading organization is the same as a non-profit organization, and we know that organization is concerned with providing services for its members. So it's not engaging in a business to make a profit. So D would be our answer. Let's go on to number 2. The term accounting refers to A, using information to make business decisions, B, using special ways to record business information, C, recording, analyzing, and interpreting of business information, D, journalizing, posting, and balancing of accounts in special books. So we know once we hear the term accounting, we're looking for some key concept like recording, analyzing, and interpreting. So we know that our answer is C. Let's go on to number 3. It says, rent expense, which is still owing at the end of the period, must be debited in the profit and loss account and shown in the balance sheet as a liability. Which accounting concept does this represent? We know once it is still owing, we know that's an accrual. So A would be our answer. Let's go on to number 4. It says, during the year, a company bought stationery for $220 and used $120 worth of it. What figure would be posted to the profit and loss account to represent the expenditure for stationery? A, $100, B, $120, C, $220, D, $340. We know it is the amount that was being used. So that is $120. So that would be posted to the profit and loss. So our answer would be B. Let's go on to number 5. It says here, item 5 refers to the following balances at the end of a financial period. Motor vehicle, $2,000. Payables, $3,000. Receivables, $2,000. Capital, $11,000. Building, $10,000. What is the total amount for the assets? So we know that our assets would be motor vehicle, $2,000. Receivables, $2,000, and building, $10,000. So that would be $14,000. So C would be our answer. Let's go on to number 6. Which of the following list of current assets is arranged in order of liquidity? We have A, accounts receivable, then prepayments, then inventory, cash, bank. B, cash, bank, prepayments, accounts receivable, inventory. C, prepayments, accounts receivable, cash, bank, inventory. Or D, inventory, accounts receivable, prepayments, bank, cash. So we know that the order of liquidity really refers to the order of the decrease in liquidity in which assets are being presented in the balance sheet. So we know that in the balance sheet, assets that takes the least amount of time to be converted into cash, that is being presented first. And those that takes a longer period of time, now we know that would be listed at the end. So we know the order of liquidity would begin with cash. So B, right away we realize that all the others does not begin with cash, so B would be your answer. So we have cash, bank, prepayments, accounts receivable, then inventory. Let's go on to number 7. They summarized the position of Foster and Scott Limited at 6th of March 2015. So we have current liability $60,000, current assets $100,000, non-current assets $200,000, and non-current liabilities $150,000. So the question says, what was the capital of Foster and Scott Limited at 6th of March 2015? So we know our current assets, $100,000, non-current assets, $200,000. So our total assets there would be $300,000. Our liabilities now, current liabilities 60,000 plus or add non-current liabilities 150,000. So that would give us 210,000. And we know the equation for capital is assets minus liabilities. So 300,000 and take 210,000 from that, we're left with our answer B, $90,000. This is another question that has been repeated. Item 8 says, question 8, it says, item 8 refers to the following information. A calculation to determine gross profit percentage is as follows. So we have 185,530 divide by 529,800 multiplied by our percent 100. Now it says, what does the figure 529,800 represent? We know that represents a total sales. Let's go on to number 9. It says, the following assets were found on the statement of financial position of a retailer. What would be the best order if these assets were arranged in order of permanence? A, building, motor van, bank, then fixtures, then cash, then receivables. B, cash, then fixtures, then receivables, then bank, then building, then motor van. C, cash, bank, then fixtures, then receivables, then motor van, then building. Or D, building, motor van, fixtures, receivables, bank, cash. So what is really what the order of permanence? Well, we know that the order of permanence is actually the arrangement of assets in the order of how long lasting they are to the business. So we know that the items that are usually used in the business um, that serves the longest period, we know that those are listed first in the order of permanence. So the ones that are the long-lasting one, long-lasting investment, we know that is listed first. So we know that, for example, cash in hand, that's the most liquid assets. So we know that is being shown at the last. So we're looking for that. So we know that cash would be at the end. So that's a clue. So right away we know that our answer would be D. So the ones or the assets that are long lasting to the business, they are being listed first. So things such as building, motor van, and fixtures, those would be at first. So we know that our answer would be D. Let's go on to number 10. Which of the following items would not appear in a cash book? A, payment for goods. B, goods sold on credit. C, goods bought for cash. D, goods sold for check. We know that would be B, goods sold on credit. 11 says, in a cooperative society, the daily affairs are administered by, we know they're administered by D, persons elected or appointed to do so. So that would be our answer. Let's go on to number 12. That's another question that has been repeated. Let's go to 12. 12 says, credit notes issued for goods returned by a customer would be entered firstly in the A, returns inward book, B, returns outward book, C, sales returns and allowances account, D, purchases returns and allowances account. We know that would be B, I'm sorry, A would be our answer. Return inward book. So our answer would be A for this. Let's go on to number 13. It says, Mrs. Hote, a grocer, bought a computer on credit from Tan Company. In Miss Hote's books, which of the following journal entries would be made for this transaction? A. Debit purchases account, credit Tan Company. B. Debit computer account, credit cash. C. Debit Tan Company, credit purchases account. Or D. Debit computer account, credit Tan Company. So we know that this would be D, debit computer account, credit Tan Company. Why we say that? We know that the assets of the computer, it is increasing. And to increase the liability, that is, the liability is Tan Company, now we would have to make a credit entry. So we're going to debit computer account since the asset is increasing and credit Tan Company, D. Let's go on to number 14. It says the acid test ratio indicates. Now we know that the acid test ratio, what do you remember about that? When we know that the acid test ratio, it is really a financial ratio that that measures the ability of the firm's liquid current assets to pay for short-term debts. So that is what acid test ratio. And we know the formula. The formula in calculating acid test ratio is current assets less stock, and then you divide that by your current liability. So current assets take away or less or stock, divide into current liabilities. So looking at our answer, what would be, looking at this question, what would be our answer? We know it would be A, net current assets less inventory available to pay current liabilities. Let's go on to number 15. Which of the following accounts is not nominal? So what do we remember from nominal accounts? We know that nominal accounts are accounts in which expenses, revenues, and capital are recorded. So we know that it would be A, furniture. That is not a nominal account. All the others are except for A. So A would be our answer for that. Let's go on to number 16. Which of the following accounts are usually transferred to the trading and profit and loss account? This one is, our answer would be C, commission received, rent, purchases. This is another repeat one question, and we had explained that in detail in our previous videos. So if you haven't watched the January 2020 and the 2019 paper, make sure that you go ahead and watch those videos. Let's go to 17. Which of the following items is a capital expenditure? Now, we know that capital expenditure is when a business actually spends money to buy or add value to a fixed asset. So what would be that? So we know that the purchase of machinery, that would be a capital expenditure. D. 18 says, in order to avoid writing numerous checks for small amounts, a firm may set up a, bank draft, B, petty cash fund, C, general journal, D, bank standing order. We know that it is B, petty cash fund. Let's go on to 19. It says, Mrs. Abel and Mrs. Blue purchased goods on credit valued at $50 and $75 respectively from Mr. Kane. Another customer paid Mr. Kane cash for goods amounting to $550. Mr. Kane took goods at cost for himself amounting to $500. Which of the following figures represents the total in Mr. Kane's sales account? A, $125, B, $425, C, $675, D, $1,175. So we know, let's look at the transaction that would affect Mr. Kane's sales account. So we know it says e-credit valid at $50. So that credit sales $50 and $75. That would be in his sales account. And then it says he paid a customer for goods amounting to $550. So that would affect his sales account. So we add $50 plus $75 plus $550. We get a total of $675. So C would be our answer. Now, Mr. Kane took goods at cost for himself amounted to $500. That would not affect his sales account. Why? Because we know that is drawings. Let's go on to number 20. 20 says, Mr. Ram, a shoemaker, bought a motor van for $11,000 cash. In recording this transaction, he should A. Credit cash, D. Debit motor van account, B. Debit cash, credit motor van account, or C. Credit cash, debit purchases account, or D. Debit cash, credit purchases account. We know it would be A. Credit cash, debit motor van account. Let's go on to 21. In Mrs. Lowe's ledger, an entry on the debit side of the drawings account and an entry on the credit side of the bank account means that A. Mrs. Lowe puts money in the business bank account, B. The bank puts money into Mrs. Lowe's personal account, C. Mrs. Lowe withdraws money from the bank for use in the business, D. Mrs. Lowe uses money from her business bank account for her personal use. So we know it would be A and B would be out. So we know that our answer would be D. Mrs. Lowe uses money from her business bank account for personal use. Let's go on to number 22. It says K. Khan, a debtor of A and B Enterprises, settles his debt of $120 less 2.5% discount by check. How should the double entry be recorded in the books of A and B Enterprises? So we know that this one is going to be C. So we're going to debit bank $117, debit discount allowed $3, credit K can $120 because the discount would be you would find 2.5% of $120 and you'd get $3. So the discount allowed would be $3 and the bank would get $170 after you deduct $3 from 120. That's what the bank. That's how the transactions would be recorded. So C. Let's go on to number 23. The formula for calculating working capital is A. Non-current less current assets, B. Total assets less total liabilities, C. Non-current less current liabilities, or D. Current assets less current liabilities. We know our answer would be D. 24 says, Item 24 refers to the following statement of financial position. Okay, so we have land and building, motor van, fixtures and fittings, or inventory, debtors, bank cash, or capital, and or drawings and payables. All right. So it says, what is the total amount for non-current assets? So we know that that would be land and building, motor van, and fixtures and fittings. So that's a total of 14,600. So C would be your answer. Let's go on to number 25. It says item 25 refers to the following data which are taken from the records of a hardware store at the end of its fiscal year. So we have sales 83,868, sales returns 1,570, discount allowed 911, inventory at start 9,850, inventory at close 11,075, and purchases 52,640, and purchases returns. So it says, what is the gross profit of the hardware store? Now we know our trading profit and loss. We know that we're going to have sales Then we have sales 83,868. Then we're going to less our returns, sales returns or returns inwards. That is 1,570. So we're going to get $82,298. Then we have cost of goods sold, which we know we're going to less that. So our cost of goods sold, we have our opening stock. There we have 9,850. Then we're going to add purchases, 52,640. That's a total of $62,490. Then we're going to less purchases returns or return outwards. That's the same, 762. So 762 from 62,490, we get 61,728. Then we're going to less our closing stock, 11,075. We get 50,653. That is our cost of goods sold. Now, for us to find our gross profit, we will deduct our cost of goods sold from $1,645. So B would be your answer. So I walk you through how you should do it. Item 26 now. Item 26 refers to the following information supplied by a sole trader. Amaris One Stop Shop. So we have net sales 30,000, rent expense 3,000, discount received 2,000, gross profit 12,000, discount allowed 4,000. What is the net profit percentage to the nearest whole number? So we know that to calculate our net profit, we know that our net profit is equal to gross profit minus total expense or less total expenses. So our gross profit here is 12,000, and then our total expense, we have rent expense 3,000, discount received 2,000, discount allowed 4,000. So that's a total of 9,000. So gross profit 12,000, deduct our total expense 9,000, we're left with $3,000. Okay, now our formula for calculating the net profit percentage is net profit divided by sales multiplied by 100. So our net profit that we got was 3,000 divided by 30,000 multiplied by 100 over 1. We are left with 10%. So our answer would be A, 10%. Let's go on to number 27. 27 says, item 27 refers to the following balances at the end of a financial period. These were from the books of J. Sammy, a sole trader. So here we have land, 7,000, building, 5,000, inventory, 1,100, receivables, 500, bank overdraft, 400, payables, 700, cash, 200, capital at start, 10,000, drawings, 300, net profit, 3,000. So the question says, the current ratio of the business rounded to two decimal places is, so we know that our, what's the formula to calculate current ratio? We know it is current assets divided by current liabilities. So we have to find out our total current assets. So total current assets now. We know we have inventory 1,100, receivables 500, and then cash 200. So when we add all of that together, we get a total of 1,800. Now our current liabilities, bank overdraft 400, payables 700. So that's a total of 7 and 4, that's 1,100. So our formula is current assets divided into current liabilities. So we're going to have 1,800 divided by 1,100. We get 1.636. Now our answer says to round it to two decimal places. So 1.64 to 1. So we have 1.64 to 1 would be our answer. So B would be our answer after we divide that. Let's go on to number 28. It says on the 1st of January 2016, $10,000 was paid towards an advertising campaign. Of this amount, $7,000 was used by 31st of December 2016. What was the amount of advertising prepaid at year's end? So we simply deduct 7,000 from 10,000. We're left with 3,000. So A is the prepaid at the year's end. 29 says depreciation in accounting terms can be defined as the C, cost of using a fixed asset for an accounting period. Let's look at our last question. It says, to which of the following accounts would depreciation of office machines be transferred? Is it A, trading, B, appropriation, C, manufacturing, or D, profit and loss? We know it is D, profit and loss. So we have come to the end of part 1 of the CSEC Principles of Accounts, May, June 2020 paper. Don't forget to like, share, and subscribe, and stay tuned for part 2. Thank you for watching.